General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance. Content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the chart work. Today, Tuesday, July 21st. It was an expansion day. It was kind of little. We engaged, confidence level, medium. Price delivery signature was seen. Income is not confirmed. Tuesday is the low of the week so far, but it's not a news event low, so it's not safe. This week should be late week anchor based on the calendar and earnings, maybe Wednesday or Thursday anchor. Is this pension playing out? Yes. Day expectation, Wednesday or Thursday. Terminus hit today, no. So we got that sweep here, so technically it's like a Tuesday low. It's the target for tomorrow. Kind of cleared the daily fair value gap today. Tuesday did a bogey sweep during overnight session. Price rallying back to previous week's internal range liquidity. I will see if we pair orders in reverse or retrace and continue. Which one? I like how we opened today with this wick. So we have this rejection block we can buy from. Or maybe type 2 expansion. Sweep this. Interesting opening with regular trading hours, clearing or creating a rejection block wick. Let's see if we get a reaction to look for a buy setup. Should be. That is that daily. Can you respect the consequential question of the for rank out? This could be Tuesday high of the week, so we came back to get this lows. Well, we have Tesla group in tomorrow. Could go for the highs or cookie price. We respect the consequent approachment of the daily. That should be fair value gap. Created Tuesday high. This could end up being a high week created at a kilo. SPX 15 very tacky. And we're still around these. We opened a gap 2 weeks ago, 4 weeks ago. First thing I notice is this is developing like another inside week. Sloppy first 2 days, some of the volume. I think getting higher tomorrow, and then maybe a sell off Thursday and Friday when earnings get nitpicked. So they probably pick at the earnings, found something wrong with it. Neutron. This low resistance to put it around into this breaker. So it'll be interesting to see if we stop here. Maybe push higher, slow resistance liquidity line. First really line resistance is the breaker block. Here for a higher objective, we got an untapped new day opening gap right here. The difference between the open and close price. Beat the tail day complete looking higher at the untapped new day opening gap. So we pretty much ate this tail. Some of the low volume days. Stock charts, look at spot. Kind of filling in this weekly volume balance that needed by side. Next upside objective would be this gap. We already been inside this gap. Again, by side delivered to the weekly VI. I think we push higher. Also note the small summer days. So all these, but not that one. These are real little candles. It's not the time of the year. Qs. It's a lot stronger here. Got them tech earnings this week. This volume balance needs buy side too. And down candles. So that's the target for tomorrow. See how the Qs rested on the VI. So this is the VI. We rested on that week. Perfect. Daily volume balance is the next objective. Also note Monday is the low versus Tuesday being the low on spot. Sometimes that S&T is the low. NVIDIA down close day. We didn't close above the previous day's high, but we did close above the closing price. We kind of created a volume balance there. Still days with long tails, small range days. Down close, but still above the previous day close. So we're kind of chilling here. Could be looking for earnings tomorrow. Engagements. Let's get the same play. You feel this regular trading hour gap. This was price creation in that rejecting block. Had a scratch here, and then this one finally took. So this is the same play as yesterday. Price reject the opening range gap. Look for some buys. Did I follow the plan? Yes. If not, what caused it? Nothing. What did I do well? Execute stops and risk, even though I wanted to add more contracts here. I wanted to get in here with more, but the stop wouldn't let me with my risk. I was able to get real time entries here, but not here. So I'll do different next time. Nothing. Did the framework play out? Yes. Which I learned about patterning, narrative, and myself. I'm getting used to the song. What do we watch for tomorrow? Google, Tesla, and IBM report earnings. So that's pretty much all the work for today. Y'all have a good day. Peace.